If you have questions about how we present liabilities in a firm's financial statements, this video will explain how we classify liabilities so you can be more familiar with the liabilities in your firm's financial statements. Liabilities are usually, but not always, presented in two broad groupings of current and non-current. Wesfarmers presents its liabilities this way. Ryman Healthcare does not, preferring to show its liabilities as a single group in order of liquidity. Liabilities are further classified according to their type or nature. A number of types of liabilities are required to be disclosed. Firms can have additional items of liabilities if they wish. We will look at each of these types of liabilities. Except for provisions, we will look at provisions, a special type of provisional liability requiring a lot of estimates and judgments, in other videos. Trade and other payables are usually mainly trade payables, that is, liabilities to pay for goods or services that have been received or supplied and have been invoiced. Other payables are usually accruals. Accruals are liabilities to pay for goods or services that have been received or supplied but have not been paid or invoiced, including amounts due to employees. Other payables can also include amounts our firm collects on behalf of others and have yet to pay these amounts, such as personal income tax and superannuation deductions. Financial liabilities can include various types of interest-bearing loans and borrowings, including bank overdrafts, various forms of derivative financial instruments, such as interest rate swaps, as well as short-term and long-term bank loans. And regardless of how a company may pay its company tax, monthly, quarterly or yearly, it may have some income tax payable at the end of the year to complete its payment of company income tax for that year. If it does, it is required to show it as a liability for current tax in its balance sheet. The income tax expense in our firm's income statement is not the amount of company income tax our firm has actually paid that year to the government. It is a commonly held misconception about accounting that accounting is cash-based, that it shows transactions based on movements of cash between a firm and other parties. This is not true, except for the statement of cash flows. There are accruals everywhere in accounting, including with our tax expense. These include an accrual for the current year's tax that is payable shortly after balance date. Our firms can also make an accrual for deferred income tax liabilities. This results from differences between the tax expense calculated in a firm's accounts and the actual corporate income tax the company needs to pay that year. We will have the opportunity to study further how we account for company income tax and various types of liabilities in both Act 19062, Intermediate Financial Accounting, and Act 19061, Advanced Financial Accounting. For further information on how we present liabilities in our financial statements, go back to Chapter 6, Section 6.2 in the study guide, and also review the Liabilities Weekly questions. Also answer, write and rate questions on liabilities in Peerwise.